Welcome to Tanks Invest, where we talk about investing, finance, and professional development. As the recording time of 9:02 a.m. on this Central European time, Ethereum could trade $3,270, that's about 2.35% so far. On the other crypto markets, see clearly we are relatively a mixed bag at the moment. But on the equity side of the spectrum, we can see clearly we are relatively green at the moment, with Dow Jones currently up about 0.14%. And on the NASDAQ front, up about 0.59%. Obviously, leading the effort, knowing the fact that there are a lot more small cap stocks that are more prone to volatility, driving the upward pressure at the moment. And S&P 500 is also up about 0.12% so far. So also on the pre-market perspective, on the dynamics front, specifically look at crypto, you can see that clearly we are having some, slight normalization or, more of an anti-coination effects coming from the equity side. And the key driver, as I'm looking into the market, is mainly coming from the Chinese growth data that came out recently. And as you know, the European markets are heading to a higher opens as they're slowly digesting the positive data that came out. And the data on a high level perspective is basically talk about the Chinese overall GDP growth. Look at the economy growth, right? 8.1% in 2021 last year in comparisons to Wall Street expectation. So when you see a positive pressure, obviously indicates that despite the COVID situation that we're seeing on a macro front, we are trending nicely. Even though we have had that COVID adjustments collectively, right? So this was not really a surprise, knowing the fact that China is one of the fastest growing economy in the world. So is India as well. So and also at the same time, it's slowly immersing its dominance onto the global economy as well. So this is a good sign on that we're trending in the right direction. Subsequently, obviously it's positive data collectively, and people are digesting this positively, which integrates and translates into buying pressure onto the equity side. But we know that collectively, it has an anti-coalition effect because of the inflationary pressure that people typically adjust that in their mindset, which indicates and incentivize people to sell off their crypto onto buying more Chinese stocks. So I wouldn't be surprised, if we see some buying pressure among a lot of the Chinese stocks as the U.S. market opens today. So keep an eye out on it. It could be some needle driving type of affectation. So we'll see how that goes. But ultimately, in addition to that Chinese growth data, we also see a lot of other news that came out on the macro front that can be driving a little bit more of a stir on the market. And coming out from the country, in the European nation as well, in UK. So Boris Johnson seems like he's in leadership crisis. Seems like there's some scandal accusing him of lying about industrial scale party amid the lockdown. So I'm not sure if this has any direct correlations onto the crypto market or the stock market specifically, but this is it obviously has some adjacent effect, knowing the fact that Boris Johnson is one of the influential member in the European nation. So it could technically drive some sell-off among the European stocks. I wouldn't be surprised, but it's kind of being net canceled out by the positive Chinese news. So net, we might just have a flat to down day, um, or up in the pre-market perspective, and then as the market opens, sells off from there, but normalize during the midday. And I think that's typically how it works on Monday as well, because of that anticipatory pressure. As people have been eyeing the market on Monday, looking forward to be buying in. So you see some buying pressure, but as they see that it's probably wise to take some profit or short-term profit, you see, and then you see that type of maneuver from there. And then the next news that I'm seeing as well is with respect to from China this time. Chinese zero COVID policy could deal another blow to global supply chains. So it seems like this is more news around the COVID variants on a global perspective. And as you know, China is one of the becoming more and more dominant on the global supply chain perspective. And this is something that is not a surprise, with the pioneer of Alibaba on being the leading effort for the Chinese export and imports. And obviously, many companies or manufacturers from US or globally speaking are sourcing their supplies and the raw materials from China. So if there's some type of hindrance from COVID, it could obviously have a detrimental effect onto, the drag effect to the global economy, not just in China, right? And that could translate into more inflationary pressure, and that will technically, if logically speaking, drive some sell-off among the stock market, but have some direct anti-correlation effects onto the crypto market. Just look at other news to see if there's anything that's really worth mentioning. The last news that I really see is with respect to inflation has arrived in big way. Jamie Dimon from JP Morgan said, and we should not be crybabies about it. So this news is basically talk about with respect to the recent sell-off that we've seen among the financial sector on last Friday. We saw that JP Morgan was down about 5% after earnings call for Q4. We saw the I think Citigroup was as well, but Wells Fargo actually beat Wall Street expectation. So it was like, majority of the bank stocks was down that day, respectively. And the reason is, behind all the media stir is really because of the fact that the technicals has been, indicating that we were relatively inflated, number one. But also, the reason that a lot of these bank stocks have been surging is because of the, quantitative tapering that we've been doing with the Fed so far. And interest hikes has been spiking as well. So, and when you see interest spikes, obviously interest spikes has a direct correlation to debt instruments that corporate companies or people use, right? And that will have a beneficial effect onto bank stocks because they're the debt provider or the loan providers, right? So it just makes sense. So that has a direct correlation effect, subsequently drive the whole macro market for the financial sector side to go up, but more inflated than its actual normalized level, right? So, and that translates into a surge. So the sell-off was a good indicator that number one, technical was speaking the truth that we need to sell off, but also is we're shifting into a right side of the spectrum that we're slowly coming back onto normalizing the economy going forward. That the banks are need to normalize, right? And that will translate that there's a foreshadow that the interest rates, despite we have allocated 4 hikes for this year in 2022, that it should subside going forward. So it's a positive outlook if you really think about that in more of a layer perspective. Hopefully that makes sense. So let's just dive into the technicals with respect to recording time of 9:09 a.m. on the Central European time. Ethereum traded $3,264, down about 2.52%. At the moment, right now, we're trading on a sideways fashion, just trading at the 3,250, which is a comfortable level to identify so far. So right now, the momentum is either we go up to the 3,450, which is the next real level, or the 3,158, which is the next real level on if we're going down, right? At the moment, we are relatively oversold at the 39.66 out of 70. We're still curving up. So seems like we're just gliding away, not really doing much. Do we see like going back down to below 3,000? I would think based on the technicals, I don't really think that's quite logical at the moment, unless we hear some major negative news coming out from the market. But who knows? It's Monday, right? It's basically just look at the news front. There are a lot of macro drivers, but nothing is really too severe. And remember, we are getting watered down by the positive Chinese news that's also being mixed into the equation. So net, I would say we are gliding positive, but more of a normalized fashion, if that makes any sense. So we're just trending away. Obviously not as volatile in comparisons to last week, which we have basically four macro affectation, right? Just to recap, right? Monday was the JP Morgan and the Goldman Sachs economic outlook that they expect that it's going to be a bullish 2022. Subsequent to that, it was the Fed's Jerome Powell speech, and then it's the CPI report, and then a PPI report, and then the bank's earnings. So it was a relatively volatile last week. But this week, I don't really foresee that it's going to be comparable in fashion. So we could technically just be trading on a sideways fashion. If there's no negative news, we could be just gliding away, right? And Bitcoin's currently at 42,724. So again, just gliding away at a comfortable level. 42,500 is basically a comfortable level that's been basically lying there for a week now, despite the volatility last week with the 30 out of 70. So relatively oversold still. So incurring risk right now is not not the most nonsensical type of move. So right now it's either we go down to like the 40, which I don't believe is even logical because that's like basically rock bottom at the moment. I think we have a high propensity to go up to the next level, which is the 43. And as we get above 43, the next momentum we need to get above is going to be 45. But 45 is not a substantive, it's more a flat number. The real level is at the 48,000 or 47,893 to be more specific, right? So I think right now it's still logical to incur risk despite the, I guess, the macro global uncertainty. Dogecoin is at about 4%. At the moment, I would still prefer 14, 17 to below. We better. Right now, we're very overbought at the 50 out of 70. So you know what that means. So I don't really suggest this. And you could see that psychologically, the chart on the MACD front is relatively overdragged. Obviously, you saw that surge when we hit all the way to 21 and immediately sold down. And the reason we sold down is because it matches with what happened before Christmas, basically, on December 14th. Cardano is up about 8%. We're above 145. Extremely overbought at 62 out of 70 at the moment. Very overbought on MACD front. You could show, huge outlier onto the chart. So right now we have a relatively big stretch to either go up to 173 or stay below and go back to 145. I would give a higher propensity of going down to 145 than going to 173. I think 173 you will hit a blockade at basically somewhere around 160 first, and that's a big stretch. So right now you have basically about 7 cents to go up, or a relatively more of a step down by 10 cents. So I think the risk versus reward ratio is not worth it for you. So I wouldn't suggest buying at the moment. Solana is now about 4% at the moment. I would still prefer to wait until we come back down to 133 to 113. I don't really suggest buying at this moment. We're relatively oversold. It's like either we go up to 155, which is the next level, which I believe we have a high propensity to sell back down as we get there because it's a relatively major resistance level. So 155, 133, and 113, depending on your risk tolerance. XRP is down about 2%. With the 76 right now, we're basically 2 cents below the level of 78, right? So it's either we go down to 69 or go up to 88. I would prefer 69 just on a risk mitigated perspective. I don't really suggest, chasing and hoping that will go up to 88. But right now it's oversold. So if you believe in this long term, it's not terrible. Polkadot is down about 5%. At the moment right now, I think anywhere from 23.30 to below is still better level for us. Right now it's relatively overbought, but on the neutral front at the 47.73 out of 70. So it's okay, not the best, not the worst, but it's not like something I would probably touch at the moment. 140 on Algorand, up about 1.22%. At the moment, 135 to below is still better level for us. Shiba Inu, I would start touching somewhere around like anywhere from basically low 2000s to 1400 to 900. Those are the frames I would be buying at. And then MacTag is up about 2.61%. Just this seems very much like head and shoulder. If you look at it as a head, shoulder, shoulder. So this is a relatively bearish pattern. If you clearly look at it, you could see clearly as a head at 292, shoulder is at 259, and there's another shoulder that we're forming at the moment. So 175 to 143 from here. AVAX down about 3.34%. 80 to 60 is still better level for us. Right now, we could see clearly it's another head and shoulder as well. Luna is down about close to 4.5% at the moment. I think still 62, 52 to 45 are still better level with the relatively overbought at the 52.52 level right now. We are, you could see how much of an outlier we're forming on the psychological front and MACD. So I really do not suggest buying at the moment right now. In respect to risk management, all these are the levels I identified so far. And let me just expand the screen a little bit so you can see a little bit better. Collectively speaking, I made some revisions here and there. Obviously, for my Patreon members, you have seen this already. So let me just. Sorry, I don't have a dual screen, so it's hard for me to manage this. It seems like it's glitching. So let me just fix this. There we go. Across the spectrum, I would say is mostly within the attractive to steal levels. Some of them are fair, obviously, because of altcoins are a little bit more volatile than others. But I'll say collectively, it's still worth your time or your energy to be dollar cost averaging at these respective level. Is still risk mitigated at a tolerable optimal level, right? So, but I wouldn't be loading up like dramatically, like again with our methodology, like 5 to 10% of your cash reserve, right? The 5 to 10% of your 30% again, right? So hopefully it's helpful. Let me know how it goes today on this Monday, and I'll let you know. Aside, watch out for the market. Obviously, I'm in Paris, so the time zone is a little different, but I'll still stay on top of the market to make sure that we're tracking it accordingly. All right, take it easy. Bye.